Welcome back. Absolutely flat on the benchmark indices. The mid-caps are up just slightly, a smidge, a fractional of a gain of close to about 0.3%. The big winner in the Asian markets today is Hang Seng, which has rallied close to about 2.5%. So optimism about China reopening, the recovery there continues to fuel up the market of Hang Seng. But let's talk about Berger Paints, because crude prices have seen a very big slide. In fact, the peak level in Brent crude prices was about $140, and now it's come, practically halved. As we speak, we're at $77, $78 per barrel, flat on a year-to-date basis, the lowest level that we've seen nearly all year. Now, this should be positive for a company like Berger Paints. In fact, when they came out with their Q2 numbers, they had indicated that softening raw material prices should aid profitability in Q3 as well as Q4. What could those numbers look like? Abhijit Roy, Managing Director and the CEO at Berger Paints, is now with us. Mr. Roy, morning. Rima here. That's the question, right? Your gross margins were about 35.5% in Q2. Has the decline in crude prices been far more than what you anticipated? Is this going to provide a much bigger tailwind than what you were anticipating? And what could the number look like on gross margins? How much can you push it up to as things currently stand?
So it was anticipated, this is what I had indicated also in the Q2 results scenario, that, prices are softening a little bit. The effect comes with a lag, so it's not that in the Q3 itself, it will be visible so much. Probably in much more in Q4, almost the entire thing will come in, the effect will come in Q4. So the Q4 margins will move upwards considerably. In Q3, there will be a marginal improvement because July, August raw materials are now getting, converted and sold in this period. So that was the peak period. So you will not see the impact so much in the Q3. Probably the month of December will have that impact. And then going forward, the fourth quarter, you will see a much higher impact.
In Q4, sir, can you inch up gross margins closer to 40%?
Well, difficult to say whether it will go up to 40% or not, but it will definitely be ahead of 38, 39. So that's about approximately where we would be.
Mr. Roy, last time you were on, you'd said gross margin improvement of between 2 and 2.5% in H2. So that's broadly how we should look at it, right?
It should be. It should be happening that way, around that margin that we had talked about.
What's the sensitivity, though? I mean, because oil prices overall are falling very sharply. I mean, even in the last week, prices are down almost, 8-9%. If prices stay here, what's the sensitivity to margins for you?
So, Prashant, it's a volatile market. It keeps changing. You've seen it going down. Sometimes it goes up. Some announcement, OPEC Plus will come and say that we are cutting, production, and then again the prices go up. So it's difficult to predict that way. But if it remains at these levels, obviously it will improve the margin further in the Q4 and going forward into Q1 of next year as well. So that's what is going to happen. However, it needs to be seen whether these prices remain at these levels or not.
Okay, all right. Hi, Abhijit, morning. What about demand? I think you were indicating that volume growth in the second half of the year could be in double digits. Is demand strong enough? Could you tell us what kind of a volume growth are you looking at? And pricing is important, not from a share market perspective, also from a client, customer point. Have you increased prices in Q3?
So no more price increases that we have taken. As far as demand is concerned, October was a little bit lukewarm, in the sense that, the rains continued right up to the 15th or the 16th. So we did grow, but not at the pace at which we would have loved to grow. November was better, we had a double digit, and so therefore in value terms, the volume value gap has decreased actually in this period because last year we had taken all the price increases by October, November. So, therefore now the gap is nothing, almost, negligible. And hence, whatever is the volume growth, 1 or 2% will be the enhanced value growth. So this quarter, the bases were much high because of the price increases. The monsoons have impacted. So it will be relatively soft in terms of the growth that we have been seeing so far in the industry. Overall, however, we think that we should be able to gain a little bit of market share.
Okay. Sir, I'm reading a report which has come out from a brokerage where they've done some channel checks, and they're saying that Akzo and Kansai are playing catch up with leaders in aggression. In new projects, Akzo and Kansai are getting more aggressive. Akzo doing better than earlier on a case-to-case basis and in B2B deals. And overall, the wait-and-watch period in terms of product launches compared to leaders like Asian Paints is also coming down. I know you indicated that your market share has improved, but are you seeing increased aggression from some companies which are perhaps smaller than you in size?
Well, paint has been a competitive industry. Everyone tries, the level best because market share, they have been losing, a little bit of market share in the past. And so I presume that they should, be looking at, restoring that back. The project segment that they're talking about is a very small segment of the overall paint industry, and the decorative paint category, so it's only about 15 odd percentage. So that's not going to make tangible difference in the overall scheme of things. We are, as I said, I think we should be growing faster than the industry, and that's what our objective is. Difficult to comment on what competitors are doing, but the results will show at the end of the day what happens.
Okay. You mentioned market share a couple of times, Mr. Roy. What is your market share and where is it headed?
It's about 18.8, as of now, looking at, pushing it upwards more towards 20% in the, next 1 or 2 years, maybe. If we can do that, that will be good.
Okay. Sir, in Q2, you said that the rural market slowed, especially in north and central regions. Has that reversed? Are you seeing a pickup in rural markets? And how much does it contribute to your overall revenues or volumes?
So there has been marginal improvement there, not substantial, but there is an improvement there in the sentiments and as well as the demand. But it's gradually improving. So I hope that, and I think that it should improve further going forward. Well, it contributes a significant portion. So any improvement there will help us.
How much does it contribute, sir? And what is the extent of improvement? Just to gauge what's happening, because this is also a barometer for what's happening in the rural economy.
Well, we don't measure it the way FMCGs measure as rural. What we do is, all our warehouses, the depot towns, we call them, we treat them as urban and the rest are called as rural as far as we are concerned. So it's not actual rural the way it is perceived to be. But we see an improvement there happening. To what extent is the improvement? Well, I would say as of now, green shoots of improvement are there visible. I don't think, massive improvement has happened. But it was, like it was going down, now that has turned and it is improving a little bit, is what we have seen so far.
Okay, all right. Final question then, Mr. Roy. You were increasing capacity, I believe. One of your facilities were to get operational. Could you tell us, has that gone live or when does it go live? And, how do you see the ramp up out there?
So that will go live, it's near Lucknow, mid-January we are going live. The finishing touches, everything else is happening. All the permissions are coming in. There are 1 or 2 still left before we can kickstart the operation. But we are reasonably certain that mid-January we should be able to start off the Lucknow plant.
All right, Mr. Roy, we'll leave it there. Thank you very much for your time. Great speaking with you. Appreciate it, as always, your thoughts and interactions. I mean, oil, of course, is the big one. It's